Now, when you think wine, you don't normally think India, but this is why you should. Indians are developing a taste for the tipple, so much so that investors are sitting up and paying attention. Sula, India's biggest winemaker, recently raised 9.6 billion rupees in its IPO. Under a third of that came from anchor investors like Abu Dhabi Investment Authority and Goldman Sachs. Now, you can argue the IPO, which had bids for more than twice the shares on offer, was weaker than what analysts had penned in. You can argue that India is still largely a spirit-drinking nation. But change is in the air. Indians are becoming more well-heeled, and this will only lead to demand for bigger and more expensive types of bottles. India has inked a new trade deal with Australia that will mean gradually lower import duties on wines from down under. And many data companies are signaling rising wine consumption in India in the not-too-distant future. This can only be a positive to exporters like Australia's Treasury wine estates. And in terms of a more global view, the wine map is also shifting. Climate change and the Russia-Ukraine war have hit the global wine industry, says the International Organization of Vine and Wine. The Australia-China trade tensions haven't helped either. Now, big wine producers want to expand in markets like India and the US, where consumption is still low. So when you next hear about investing in anything related to wine and India, it might be worth taking note.